Hi, I'm Jane King, and this is New to the Street in person back here at the NASDAQ market site in New York City. This show is all about public, private, and blockchain companies, how the CEOs, the founders, and the innovators bringing you lots of opportunities to consider. Here we go. Acurax Pharmaceuticals is a publicly held clinical stage biopharmaceutical company developing a new class of antibiotics for infections caused by bacteria that are listed as priority pathogens by the World Health Organization, the CDC, and others, FDA as well. So the CEO, David Luci, is here with me to explain. Now, tell me about your lead antibiotic candidate, because I know it's going to be doing phase 3 clinical trials soon, right?
Yes.
Okay, so talk to me about that candidate and what you expect out of those trials.
Thank you, Jane. It's a really exciting time. We just announced our top-line data on ibezapolstat, our lead antibiotic to treat C. difficile infection. And that data is clinically comparable to the standard of care, vancomycin, and we're going on to phase 3. We'll be meeting with the FDA in the first quarter. The data was phenomenal for ibezapolstat in phase 2. Altogether, the 2A component, 2B component, we were 25 out of 26 cures, 96.15%. In the phase 2B, Oral Vanc did better than it usually does. It got 14 out of 14 patients, but looked at within the context of their 37 years of data, 2,000 patients that we have evaluated, they have an average cure rate of 85.5%. So with that in mind, and with Merck's fidaxomicin at 88%, both of which have a lot of reinfections, and we have none, we're really excited to be moving on. We have a robust package to move to phase 3.
Yeah, I always remember the first time we talked about this, you talked about how there hasn't been anything to treat the C. diff in decades, and it just seems like it's kind of been just sitting there as a problem, and nobody's really done anything about it until you came along.
Yeah, it's true, and you know, a lot of big companies fell by the wayside. Recently, Pfizer had a vaccine for frontline therapy. They projected it to be a $1.05 billion opportunity. We agree with those numbers for frontline for C. diff, and they failed phase 3. Sanofi failed phase 3. Finch went by the wayside. Summit Therapeutics failed phase 3. So we literally are the next antibiotic up to bat with the FDA. There's no one closer to FDA approval than us in the C. diff space, and we're going into phase 3. And not only are we going into phase 3 with the FDA, we're going to leverage all of the time and money and effort, the preclinical and clinical package, and after we meet the FDA, we're going to leverage that data and we're going to go to the European Medicines Agency.
Okay, interesting. Now, this vancomycin.
Yes.
Right, okay, it was approved in 1986?
To treat C. difficile, yes. Originally approved in 1958, but for C. diff in 1986.
Got it. And it has a high reoccurrence rate, right?
30% recurrence rate.
Okay, and that's just exactly the problem that you're trying to address.
Exactly, and I think that high recurrence rate and the fact that it's a broad spectrum antibiotic which destroys the microbiome, I think that's why Pfizer and Sanofi wanted to knock it off as frontline therapy in a $1.7 billion market, because they had a vulnerable frontline therapy to beat.
Okay. Now, you just said $1.7 billion market. So how big could this C. diff treatment be?
Well, if the data continues with the characteristics we've seen so far in phase 3, we agree with the Pfizer CFO, who's in Fierce Biotech, and identified it as over $1 billion product.
Okay. Well, David, please keep us up to date on this, because I know you're entering this crucial phase for the treatment, and I wish you the best of luck.
Thanks so much. We have a lot of data coming out in the next 90 days, and stay tuned. I hope to give you an update.
All right. Thank you.
Thank you, Jane.
Funding is the lifeblood of any business, but it is not always easy to get. Coastal Capital has an innovative way of loaning money to businesses that can help solve some of these issues. So with me is the founder and CEO, Kortney Murray. Great to have you back here. So tell me, what's the latest with Coastal Capital?
Well, thanks for having me back, Jane. Coastal Capital, over the last couple of years, as you know, COVID has been a little crazy for businesses, and lending in the business arena has been a little bit wishy-washy. So we had to kind of reinvent the way we were approaching business lending. And one of the things that I've created the mission around is really getting the narrative out there to change the way we're looking at lending and the equation. And so in the last couple of years, we've really put together a business model, and we're getting ready to go in for our first 506c capital raise to allow debt for additional businesses out there with our way of lending.
Okay, so well, explain your way of lending for people who maybe aren't familiar.
We are putting the human factor back into the lending equation. So as you know, 1950s, our lending equation was basically born from Bill Fair and Earl Isaac, and it's an algorithm that they use to lend through bank financing. And we are a financing company that lends to businesses, but I believe the algorithm really needs to be changed, because through COVID, a SKUR and things like that people should not be just lending based on a SKUR. We have to look at the human aspect, the sweat equity of the business, the way the business is performing, not just the credit of the person running the company. Mm-hmm. And so we're really putting the human factor back into lending.
So you talked about the capital raise.
Yes.
It's a big step. So
it is.
Tell me about that, the process. How do you plan to use that for growth and your future strategy?
So the process has been very interesting, something I've never done before. I've learned a lot through the process, and we are at the ending stages of our PPM, which is the paperwork that has to be filed for the SIC to allow you to raise capital. And we are raising debt so we can allow for a diverse fund. We want to lend to more women. 30% of the funds we'd like to derive towards the women in business, as well as minority funding. And we'd also like to educate, because our younger youth is our future. And so the education on business finance is very important.
Yeah, interesting. And not something they really learn in school.
No,
so
not at all.
That's super helpful. Can you tell me more about what plans you have then for Coastal Capital in 2024?
Sure. So 2024 is going to be the year of education. We're going to put more webinars and really collaboration. We call it collaboration is the new currency at our company right now. Manufacturers and vendors who sell equipment, they had equipment that was on back order or not being manufactured on time. So a lot of their sales force have struggled to push their bottom line for cash flow. We want to educate more vendors, letting them understand how to, sell in the economic times that we have with interest rates that are current. And so we really want the education aspect of the business to come out in 2024.
Yeah. Well, Kortney, great to get caught up on Coastal Capital. Great to see you again, and good luck as you pivot and kind of take a new venture.
You. I loved being here. Yeah. It's always a pleasure.
Thanks.
Thank you.
The American Conservative Values Fund is an investment alternative for politically conservative investors who are looking for shareholder returns. And with me is Bill Flaig, the founder and CEO of ACVF. Did you create it, and why did you create this fund?
Yes. Well, first, thank you for having me on the program. And I've got my partner and I have over 25 years experience in ETF and mutual funds on the investment management side of things. And as we've seen the industry grow and our experience grow, we've seen thematic ETFs, ESG-oriented funds, but we didn't see anything growing that spoke to our values, spoke to our value set. So we set off to create this American Conservative Values ETF 3 years ago, and we're really pleased with the results so far. To date, we beat the S&P 500. slightly in the 3 years, and we just got a Morningstar 4-star rating.
Wow. I mean, that's really good. And beating the S&P 500 is an accomplishment.
Yes.
Not a lot of funds do that.
Yes. We're not creating an expectation that we'll always outperform the S&P 500. We're just trying to provide a diversified portfolio with conservative values.
What is your investment thesis? How do you pick these companies?
The thesis is, and we're getting more and more validation of it, I suppose, is that companies that engage in political speech or deviate from maximizing shareholder value are, hurting the investors. Stakeholder value is sometimes called. So companies that are really focused on ESG or stakeholder value and at the expense of shareholders, we're trying to avoid those companies. So we have principal boycotts of 34 companies now, which represent about 25% of the S&P 500. So we exclude from the diversified portfolio the companies that we think are the most egregious towards conservative values.
Well, and we have seen a lot of politically motivated companies doing things and getting involved. And I've kind of wondered over the past few years, how is this going to turn out? Because it seems like you're alienating 50% of your customer base.
Yes. And that's, to me, and a lot of everyone, when they think about it, it's very alienating to do political speech. Either way, you're going to lose customers, you're going to upset employees. So there's, some businesses are built around, liberal values, and that's fine. But for anybody who's just got a regular business, it's dangerous to.
Yeah, we see Target and Bud Light, and there's been a lot lately.
Disney.
Yes, Disney is another one. So, will your approach sacrifice performance at all?
It hasn't to date, as I said, and the portfolio, we build it to be diversified. We have all the sector exposure. It's a blend portfolio. It doesn't go towards value or growth. So the expectation is that it should be comfortable being an S&P 500 index replacement in a core part of the portfolio.
How do you decide which companies to boycott?
It's a qualitative decision. It's an actively managed fund. We are focused on issues that are resonating in the political community. Right now, since we've launched, I say most of our focus has been on companies that are suppressing conservative voices or denying conservatives access to their products. So debanking, deplatforming, social media, algorithms skewing against conservatives. That's been our main focus. But obviously, sanctity of life is important, as well as just liberal corporate activism.
Yeah, no, it's kind of shocking what's been happening in some of the corporations. How does boycotting their stock hurt the company?
It's a good question. And I mean, as consumers, we have power in the products we purchase, and which I think we're familiar with. But we actually have power in not investing in the companies themselves. So the companies need capital. One of the ways they get capital is the stock market. So by divesting the companies with enough size, it could drive the price down, affect the managers in their paycheck. I mean, I think Disney 18 months ago is a great example. There was such outrage over what was going on with them at the time. Their stock went down, I think, like 32%, and the CEO lost his job and was replaced with a new CEO. So I think that Disney is a good example of the power of, the marketplace to change leadership in a company. Yeah.
How can somebody find out more about the fund or invest in it? How does it fit into a portfolio?
It is intended to be a large cap core replacement, S&P 500, Russell 1000. I think a lot of people in their 401ks and IRAs, they own mutual funds that they'd be shocked with what they own. They are essentially owning, BlackRock, Disney, Starbucks, Google, Amazon, these companies, and they don't even know it. So there are options out there. They don't have to just, blindly or begrudgingly invest in those portfolios.
Can somebody buy the fund directly from your website?
No, it has to be purchased in a brokerage account.
Okay.
And the ticker symbol, as you mentioned earlier, is ACVF, American Conservative Values Fund. If anybody types that into their software or search engine, it'll pull up information about it. Come up
just like a stock will.
Yes,
so,
exactly.
Well, Bill, thank you so much. Very interesting.
Thank you. Thank you for having me again.
Lameness issues, joint pain, and osteoarthritis can be difficult to treat and debilitating for an animal's health and well-being. Take control of lameness issues and joint pain. Introducing Spring with OsteoCushion technology. With just one injection, Spryng, with OsteoCushion technology, targets the root cause of lameness issues, joint pain and osteoarthritis, helping animals do what they do best.
PetVivo has an innovative tool to help manage osteoarthritis for animals. And with me, CEO John Lai, who's in town for a conference, a veterinary conference. So tell me about this conference and why these conferences are so important to your business.
Sure. I'm here for the U.S. Veterinary Conference at the Javits Center. And the conference has a lot of veterinary doctors. And what we do is we're able to present some of the clinical data that we just completed, and it's to educate the doctors how our product works and so on. And the importance of that is that our product is so innovative and disruptive to the industry. It defies what they have learned in the last 30 years on the approach to treating osteoarthritis.
Yeah.
Because it's a multimodal approach. They're used to starting off with NSAIDs, then hyaluronic acid, then they go to stem cells, and then joint replacement. Ours basically says, you do an injection, our particles mimic cartilage. Once it's in the synovium, it forms a scaffolding, and it lasts at least a year. They're not used to having products last so long.
Yeah, well, and there's probably a comfort level that they need to reach with something so new and innovative before they're ready to start using it in their patients.
We have multiple studies on safety for cats, dogs, horses, and then you have studies showing the efficacy of each joint. We just had one come out about a month ago that we presented at the American College of Veterinary Surgeons. It was on ruptured cruciates, which is, in humans, their ACL. And the treatment for that generally is surgery, 100% of the time. Well, we had very good data that shows this could be a very good alternative to surgery on a lot of these dogs. So we're helping provide cost savings to the consumer for healthcare and providing a much better medical outcome for the animal. Instead of going through all that rehab and surgery, it's very stressful.
Absolutely.
Yeah.
Okay, so let's talk about the first quarter of 24. What do you have planned for that?
So actually at the end of this month, there is a major equine conference in San Diego called the American Association of Equine Practitioners Conference. It's the largest in the United States. And we actually have 2 of our vets that's been accepted to do major theater presentations talking about the use of our products in different applications for horses. So we're pretty excited about that because that draws and educates a lot of veterinary doctors to learn about our product and the various uses. And the first quarter, we have the Veterinary Medical Expo in Orlando. It's the largest small animal vet show. Well, actually, there's also equine vets there, but it's mostly small animals in Orlando, Florida, second week of January. And there we have a couple of outside veterinary doctors that will be presenting to the whole conference on Spryng and the potential alternatives to surgery and stuff like that. So we're pretty excited to have that one, and we have data coming out at each one of those conferences from studies, and also we have what is called an adverse event team. So every company needs to track that for the FDA, and I think we're going to see some very good numbers coming out on Spryng. Probably 1/3 of the lowest that's in the industry.
Yeah.
Yeah, I mean lower than the third, which is the lowest. So,
okay.
Yeah.
Well, please keep us up to date. I know you will, as all this data comes out, and best of luck.
Yep. Thank you, Jane.
Thanks, John.
Your data is vulnerable to hackers, with email being the cause of 91% of all cyber attacks. Introducing SKUR, Swiss-hosted, data-mine-free, private and secure solutions to protect your communications. Secure Mail offers secure and private email communication. Secure Messenger offers private and secure chats. Secure VPN encrypts your internet traffic and protects your digital identity. Regain your privacy today. Visit SKUR at sekur.com.
Hi, everyone. Welcome to your Secure Privacy and Security segment. I'm Anna Berry with Alain Ghiai, the CEO of Sekur. So our weekly hack topic is a big one. On Thursday, the world's largest bank, ICBC, which is Industrial and Commercial Bank of China, was hit by a cyber attack, causing a major blackout at ICBC's US broker-dealer, which left it temporarily owing BNY Mellon Bank about $9 billion, which is an amount many times larger than its net capital. So Alain, talk a little bit about what happened here. And this affects people at a very high level. How does it affect us everyday users?
Well, it affects us because some of us are invested in the stock market or have investment in banks, mutual fund, 401k. I mean, everybody somehow is invested in the stock market through retirement plans or directly. And here we see some example of how the hacking world and all these events are affecting everyone, because now it's becoming dangerous as the banking system gets a bit shaken up. We know that when the banking system gets shaken up, our entire lives are upside down. And, you know, this wasn't a huge thing, but this is a classic example of how it can disrupt markets. So that's something, that's an angle that people don't think of. You know, usually, you know, and this was a hack that was done in the US. It was on a Chinese bank. We don't know who it was. And they were left with using USB sticks. In fact, they had to leave their corporate email to use Gmail. I don't know who was hosting their corporate email, but usually you have one of the duopoly, as I call it, between the two big companies, and they had to switch to the other one using Gmail as a backup, and that's pretty dramatic and you know, not entirely professional either, I would say. You know, I'd recommend something more secure than that, but that's just how it is. They had no backup plan whatsoever.
Right. And I'm sure there was a lot of financial information exchange on that open source email. So let's talk about some of the dangers. I mean, if there is a blackout, you have to get your information shared from one person to the other, and you use an open source versus using something more like the secure email and how that helps protect our data. Talk a little bit about that.
Yeah, it's interesting. This whole hack reminds me of close to 10 years ago, we had the idea of SKUR, and SKUR was essentially going to be a big backup system. This is when the Sony hack happened. If some of you guys remember, the Sony employees had to get back to pen and paper and using BlackBerry, old Blackberries that are no longer in circulation now. And essentially, they got a huge hack. Their email, their communication, everything. And the idea came from somebody I know in the media. We were discussing that companies could have SKUR as a backup and then have a failover switch directly to SKUR. And that's how, you know, the name kind of came up too. So typically, if you use secure mail, first of all, because we don't host our infrastructure in the big tech and the big four hosting companies, we have our own infrastructure in Switzerland, our own server, and we don't use open source coding. It will reduce dramatically the risk of these hacks, because we also don't data mine you. So when you data mine data, when you sell data, even if you are a great secure provider, the people you sell the email to are not, it's not their business to secure your data. They're there to sell you something. So, and when you have billions of people on a system, you're going to have some leaks, especially if you have millions of people working on the code. So we recommend using secure mail with our secure send, secure reply feature, which offers a way to send an email to an outsider even and have them reply back with a lot of attachments. It's got a lot of cool feature, and it's in full privacy because the whole communication happens only within a secure private network in Switzerland within our server. So that's a huge advantage.
It is. So you have the secure mail, the secure messenger, and you also have almost like a bundle, if you will, with this VPN. And that's also very important in today's age, to have a VPN to basically hide where you're coming from.
Yeah, we have a secure VPN, which again uses our own infrastructure, no third-party cloud, no third-party bundled services. Because when you use third parties, they already have your data. They basically they allow these bundles because they're going to take data. Data is the name of the game. We don't do that because we'll charge you our $9 a month or whatever, and you pay us and you get the full privacy. So I would recommend, whether you use secure mail or messenger or not, definitely get our VPN. Super easy to use. It will mask your IP and make it look like you're in Switzerland. So when people in the US that are more and more targeted, this bank is a great example. Even though they were a Chinese bank, they are in the US. You notice it's the US entity that got hacked, not the Chinese entity. And we know why they hack the US all the time, because you have the most valuable data. You want to be invisible to hacker. You want to be in stealth mode. And that's why you should use a VPN like ours. And of course, you should bundle with our email as well, and you get a double protection like that.
Stealth mode, that's the takeaway. And it's a simple adoption of the services you provide. So I'm sure our viewers are curious, what are the next steps and what is the promo code for today?
So I would say go to sekur.com, sekur.com, register for a service. You can bundle them as you register. It'll be prompted if you want to bundle 1 or 2 extra service, and use promo code privacy. And that will give you 15% off for 5 years on any solution. And, you know, I'd recommend doing that. We have a help section where you have tutorials. We're just launching. We're going to actually post these interviews that we do on our blog as well. We're just starting that, which is a great educational piece. So yeah, go ahead and get Sekur and get your 15% off.
Perfect. All right. Privacy has arrived with Sekur. Great speaking with you, Alain, and we'll see you next week for another weekly hack topic.
Thanks everyone for watching, and be careful out there.